Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, March 5th, and actually it's the next morning already. We are in pre-market, and I was just about to post a recap of yesterday on TradingView, but we had such awesome price action. It was a really fun day. I think it would be a disservice if I skipped making a video. And I think I have just enough time to do that. So, yesterday was Tuesday, March 5th, and we did open with a gap down in SPY. And then from there, we dropped down to the 200-day moving average. Now that 200-day moving average was outside of the implied move. So we did find ourselves at the bottom of the trading range pretty early on. And then from there, we got pulled back up, took it all the way back to the 35 EMA, which was right at the previous day's close. So we closed out this morning gap. And then from there got violently rejected. We got a rug pull power hour. So a lot of volatility, and these two levels right here, the 200-day moving average and the weekly 35 EMA, did catch us, and we did get scooped back up into the trading range. Let me zoom out really quickly, and let me do it on SPX. Both the 200-day moving average and the weekly 35 EMA are huge levels that need to be held to keep the uptrend going. So let's take it to SPX, and on the 1-day time frame, there is the 200-day moving average. That is right where we bounced yesterday. And then 35 EMA was just a little bit above that, and that is right here. And you could see that 35 EMA clearly defining the uptrend. What happens oftentimes is if you see one red candle, there is a small window of opportunity to get back above, which here we did, and then keep moving up. And if we print more, then we'll start seeing the 35 EMA as a resistance. Here you could see one red candle and then an attempt to get back up and then got pulled back down. So very critical level. What we print next here is going to be very telling about what direction we go from here. So SPX, then let's do SPX on the 30-minute time frame. Same thing here, we gapped down and dropped to the 200-day moving average. We did briefly get underneath that weekly 35 EMA that I just showed, down to the 200-day moving average, and this channel right here brought us back up. We took it back to the 35 EMA on the 30-minute time frame, and then got rug pulled at that level down to close at the bottom of the implied move. So bottom of the implied move for yesterday was 57.80. We did close just a little bit underneath that. And let me go back to SPY really fast. I didn't mention that 577 was the bottom of the implied move here yesterday. We closed just underneath that at 576.86. So lots of volatility. You can definitely tell that VIX is in the 20s. We were actually trading VIX around 25 yesterday most of the day. And VIX at this level is my absolute favorite. All right, so SPY yesterday closed down 1.18%. SPX closed down 1.22%. VIX also down 2.34%. And we closed just a little bit outside of the implied move yesterday, but we were definitely very close. Bull put spreads all would have paid at any level here, especially if you put them early on, over here, and then we closed just a little bit outside of the implied move. All right, and then QQQ. We did open QQQ with a gap down, and then a drop down to the bottom of the implied move. Bottom of the implied move was 490. Bottom of the 30-day average volatility was 488, and that was a perfect spread and the perfect level to load up for a swing back up to the 35 EMA. Always know where your 35 EMA is because we return to it all the time. If we get too far away, we tend to return back to the 35 EMA. So huge swing from top to bottom. And then here at the end of the day, that 35 EMA did act as a resistance, and we got smacked back down to close red. So QQQ closed down 0.3%, VXN up 1.04%, and we did close within the implied move here. And I want to backtrack just a moment here because this actually makes a little bit more sense. But VIX, I did say, closed down 2.34%. This, we have moved on to the next day already here. So this is this morning's reading. I'm absolutely certain that we closed with VIX up yesterday. So disregard what I said a few minutes ago. But VXN for QQQ did close up yesterday, 1.04%. And this 35 EMA right here, we did bring it down all the way to the 35 EMA on the weekly contract. So let me take that to the weekly really quickly. Right here, you could see the 35 EMA. We are sitting right on top of it. Look how cleanly this defines the uptrend. There's a small window of opportunity here. You could see this candle right here took it down to the bottom of the channel here. Right here, we bounced on the bottom of the channel. But we're at a very critical level with the 35 EMA on the weekly time frame. The last time we actually printed a red candle here, that 35 EMA turned into resistance and we brought it all the way back down to the 200-week moving average. And for QQQ, that is at 380 right now. Extended out maybe 397 or 400, something like that. On the weekly time frame in Stupid Willie, we do have a bearish divergence right here. So strength is falling as price is going up, and that is a sign of weakness. All right, so back to the 30-minute time frame here. So that is this right here. The 35 EMA is that level I just showed you that we need to hold. If we start trading underneath it, then that is a sign of long-term weakness, and this is likely where we'll see long-term profit taking. All right, and IWM. IWM yesterday opened with a gap down and a drop to the bottom of the trading range, came out a little bit right here. We dropped just underneath support and then got pulled back in. So this support right here, where is that? That is taking us right here back to September of 2024. So that is at 204, and we saw a bounce on that level that was also the bottom of the implied move. So a beautiful spread right here. If you sold 205, 204 spreads at the bottom of that move, then you would have closed that up 100% when we pulled back up to the 35 EMA. 35 EMA smacked us back down, so we did close red and down 1.13%. RVX closed up 3.98%. And we did close within the implied move here. That 35 EMA on the 30-minute time frame is still holding strong as a resistance here. And lastly, we have DIA. DIA opened with a gap down into this support gap and closed it out. We dropped all the way down to the weekly 35 EMA. That is a common thread across the indices. The 35 EMA is a huge level on the weekly time frame, and we are testing it. So we dropped down to the weekly 35 EMA, brought it back up to the 35 EMA on the 30-minute time frame, and got smacked back down all the way to the 35 EMA weekly. Let's take it to the weekly time frame right here. So right there, you could see that 35 EMA, and we do have a red signal line right here. If we start printing red candles under here, you could see that that 35 EMA would likely turn into a resistance as we travel back to the 200-week moving average. And usually when returning to the 200-week moving average, it is not a straight line. You'll see a red candle, an attempt to get back up above, and then push back down, and then resistance on the pops. So even right here, you could see a bounce from the 200-day moving average up to the 35 EMA and then getting pulled back down. So if we do print a red candle here, that's when we'll be like, whoa, okay, and start looking lower. And it's easy to see just by looking at this chart that we are pretty overdue for a trip back to that level. So there you have it, guys. Trading ranges for today will be out on TradingView in a few hours before markets open. And have fun today, trade safe. Make sure you take profits when you're up, and I will see you guys tonight.